Hi students, 12th Standard Accountancy, Chapter-6, Illustration, Sum number 15. Kavita, Kumuda and Lata are partners sharing profit and losses in the ratio of 5:3:3 respectively. There are three partners in the partnership firm, Kavita, Kumuda and Lalita, and their profit sharing ratio is 5:3:3. Among these three partners, Kumuda retired from the partnership firm dated on 31st December 2018. On the date of retirement, capital account shows credit balance 2 lakh rupees. Listen, who is retired from the partnership firm? Kumuda is retired from the partnership firm. So, her credit balance shows 2 lakh rupees. There are three situations is given below. Let's see one by one. The first situation is amount due is paid off immediately by check. Listen, at the date of retirement, a firm has the sufficient lump sum cash within it. Okay, so immediately the amount paid in cash immediately to the retiring partners. Who is the retiring partner? Kumuda is the retiring partner. What is the journal entry? Debit the receiver, credit the giver. Okay, so who is receiver here? Kumuda is receiver here because Kumuda is a retiring partner. So Kumuda's capital account is to be received 2 lakh rupees. Debit the receiver. Kumuda's capital account debtor 2 lakh rupees. So credit the giver. Who is giver? Bank account is the giver. Listen, the existing partner, the remaining partners paying the due amount immediately by check to the retiring partner Kumuda. Check means bank. Okay, so bank is the giver to bank account. So Kumuda's capital account at 2 lakh rupees to bank account 2 lakh rupees. Amount due paid immediately. Let's see the second situation. Amount due is not paid immediately. What is the journal entry? Listen, I will explain you with the example. Listen, Kumuda retired from the partnership firm suddenly without any prior notice to the remaining partner. Okay, so at the date of retirement, the firm does not have sufficient cash within it, lump sum amount for settlement within it. So, the firm cannot pay the cash immediately to the retiring partner. So, when the amount due is not paid immediately in cash, what is the journal entry? The journal entry is debit the receiver, credit the giver, right? So, who is the receiver? Kumuda is the receiver. Okay, listen. At the date of retirement, the firm does not have lump sum cash within it. Okay, why? Why? Because the retiring partner Kumuda, without any previous notice, she retired from the firm immediately. At the date of retirement, the firm does not have sufficient cash to settle to the Kumuda, retiring partner Kumuda. Okay, so what we have to do? Up to the settlement of the retiring partner, the existing partner asked sometimes like 3 months or 6 months to settlement. Okay, so up to that settlement, the retiring partner's Kumuda's settlement due amount is treated as a loan. Why? How? Which means if the retiring partners are not receive his settlement because there is no lump sum amount in the firm. Okay. So for that, the retiring partner's due amount is treated as a loan. So we have to assume or we have to consider that the retiring partner's settlement amount as a loan amount for the firm for few months. Then after collected that cash, the remaining partners will transfer the entire amount to the loan account of the retiring partner. Okay. So, who is the receiver? Kumuda is the receiver. So, Kumuda's capital account data 2 lakh rupees is to be debited, and after collected that Kumuda's settlement, then that amount, the settlement amount is transferred to Kumuda's loan account. Why? Because for they need some time for collected the money. Okay, So up to that settlement date, Kumuda's retiring partners Kumuda's settlement amount is treated as the loan amount to the firm. Okay. So after collected that money, the existing partners transfer that loan amount to Kumuda's capital amount, that settlement balance, settlement amount, due amount to Kumuda's loan account. So credit the giver. Who is the giver? Loan account is the giver. So Kumuda's loan account. Kumuda's capital account at 2 lakh rupees to Kumuda's loan account 2 lakh rupees. Then let's see the third situation. Okay. 70,000 rupees is paid immediately by check. So at the date of retirement, the firm has 70,000 rupees cash within it. So at the date of retirement, immediately the firm paid that due amount cash to the retiring partner Kumuda. What is the journal entry? Kumuda's capital account at 2 lakh rupees to bank account 70,000 rupees, because that 70,000 rupees paid immediately by check. So for that, to bank account. Okay. And the rest of the balance due amount is paid or transferred to retiring partners loan account, because they need some time. The firm needs some time to collect the settlement amount. Up to that settlement amount, the firm treated that Kumuda's retiring partners settlement amount as a loan amount. Okay. Then after they collected, then they transfer that settlement due balance amount to Kumuda's loan account. Okay. So the rest of the amount is 2 lakh minus 70,000, 1 lakh 30,000 rupees. That 1 lakh 30,000 rupees is transferred to Kumuda's loan account. Okay. So do you have any doubt? Please comment it into the comment box. Thank you. Take care. Listen the third journal entry. There are two transactions here. One for cash. At the date of retirement, cash immediately paid to the Kumuda's capital account. Okay. On the basis of check. So Kumuda's capital account data to bank account, and the rest of the balance due amount they treated as a loan, which means the existing partner borrowed loan from the retiring partner Kumuda 1,30,000 rupees. After collected that rest of the due amount 1,30,000 rupees, then the existing partners transfer that 1,30,000 rupees rest of the balance due amount to Kumuda's loan account. Are you clear? Do you have any doubt? Please comment into the comment box. Thank you. Take care.